Welcome, and again, thank you for joining us. This is a webinar hosted by the Twin Cities Shackley Group, teaching you not only about some tax tips and savings and great ideas of how to put more money in your pocket and get more money back from Uncle Sam, but also at the end of this webinar, my lovely wife Cheryl will be sharing a great business presentation on Green is Great Business, how this incredible business with Shackley can help you not only save green, but also make green and be green. And you'll learn more about how we're turning green into gold bars that you can take to the bank. All right? So with that, let's talk a little bit about tax tips. You know, a lot of people, when they look at this business, have different reasons for wanting to get in. The number one reason for a lot of people is they want to make money. Number two might be they want to get healthy. Number three, they may want to live a better life with more time freedom. They might want to save money on taxes. And you know what I say? All of the above are good. I always say that if you focus on health and wealth, you're extremely wise, because even if you make a bunch of money in this business or any other business, and you don't have your health, what good is it? So the number one tax tip that we can tell you guys is that you need to find a good business and then a good tax accountant that can help you to be able to get all the tax benefits that you can get out of a home-based business. Now, we've done a lot of research in the 20-plus years that I've been in the industry and have not found a better company that is stronger financially, that is better in the way of the pay plan, the incentives, and of course the fact that we also have the tax benefits and the health benefits. So the tax advantages alone are worth getting started in staying in this business. You know, for a lot of people, they may not make as much as they wanted to in the first year, but they can definitely, on average, save you know, a bunch of money on their taxes, or in turn get anywhere from $3,000 to $6,000 more back from Uncle Sam than they did in the prior years just by having a business. So here's the deal. If you don't make a lot of money in your current job or business, you need tax breaks to be able to have a better net income. If you make a lot of money in your job or other business, then you really need the tax breaks, because we obviously want to make sure that people are being able to take advantage of everything that we have to offer through running and operating your own business. All right, so with that, let's talk a little bit more about the ideas of what we have. And first thing is really important in getting this process started is your documentation and documenting all your expenses. Now, later on, I'm going to show you some different handouts that will be available on the website, and Debbie's going to talk about some of the deductions as well. But the number one thing you got to remember is that the tax code, as complicated as it is, and as much as they've tried to simplify it, is designed to give business owners, you know, those people on the right side of the cash flow quadrant, those are the people that are taking advantage, the big business owners, and even the self-employed people that are on the left side, and then of course those people that are making big money as far as investments. The tax codes are designed to give business owners and the wealthy people the tax breaks. By the way, you don't get those with a job. Now you might say, yeah, well the rich keep getting richer and the wealthy are, you know, more wealthy. Well, I don't know about you, but I'd rather join them than just whine about it. And so the cool part about it is that whether you're in a small business or if you're self-employed or running a home-based business like Shackley, the tax deductions are not only legal, but they're also ethical. It's just that most people don't think of it as something they can do because they've been conditioned in a job that they only get certain tax write-offs and credits for having kids and going to school and medical expenses, et cetera. But there's so much more when you run your own business, all right? And so remember, it is your own business, and so almost everything that you spend money on, you know, will be something that is related to your business and therefore is a tax write-off. So you can now qualify to deduct things that you already spend money on, and that's including things like, you know, food, you know, your smoothies that you take each and every day. If you're doing the breakfast drink of champion, whether you're on the lean and healthy or the turnaround, all of those things, including samples and more, can be a business write-off. Now, one of the things I want to talk about here, and I'm not sure if this is out of order, but that's okay. The fact is that when you're doing your own taxes, you might be a little bit scared because you're like, well, I used to only have to do like the easy form. Well, let me tell you, if you're doing the easy form, the government is easily taking more money than they should and not giving you the kind of returns that you need. So what I'm going to encourage you to do, if you're a little bit overwhelmed by this idea of itemized deductions, Schedule C, and the long form and things like that, like I said, find a good tax accountant who understands home-based business and work with them, because even though they're going to charge you a fee for filing your return, you're going to be able to write that off as a professional fee. And right there on line 17, as you can see, let me just get my little highlighter out here. Yes. And show you that that would be one of the areas right there where you'll be able to write off attorneys that are helping you set up your LLC or your incorporation, your tax accountant. All those things are on there. And so if you look at this list here, these are things from advertising, whether you're doing online or offline things. We're going to talk about the different other expenses, but I just want you to, won't go into the details, we'll do that later. But all of these things, from home office deduction to the travel to different meals, any licensing or training that you're doing as far as education, all those things can now be a business write-off. And so the cool part about it is this is money you're already spending, but now you can write it off. And by the way, when you really understand this on the Schedule C, the big area that you're going to be saving a ton of money on is when you're working it all out, you're going to have to figure out how many miles that you drove, and these business miles are going to be the ones that are so important. The commuting miles, by the way, are not tax deductible. Those are the miles that you drive from your home to work. But watch, if you stop at the post office or have a quick meeting at Starbucks on your way to work, which is almost to work, then that entire amount to the Starbucks where you met that prospect is tax deductible. It's just that the last 2 miles on your way to work is not. And then, of course, you have others when you're doing errands and different things like that. So the idea is that you're going to be able to not only to take miles, meals, entertainment, travel, and home office deduction, but I'm going to tell you right now, this Part 5 in other expenses, this is where thousands and thousands of other dollars that were referenced earlier, and you'll see referenced later as well, will show up on these lines, that you're going to be able to just start line item after line after line item. And I've pretty much filled up all those lines with all the different expenses that I've taken. Now people say, well, yeah, but can you really take all those write-offs even if I didn't make a lot of money? The idea is that as long as you have the intent to make money, you have a legitimate write-off. After 7 years, if you're still not making money in your business and you're still taking a lot of write-offs, then there might be some issues there. But for the first 5 to 7 years, as long as your intent is to make money, you have the legitimacy to be able to write those things off. So with that, I just want you guys to understand that it's really all about record keeping. And it might seem like a big pain in the butt, but you're going to find out later when we share this document with you on how you can make $240 an hour by just simply keeping your receipts and keeping good records, all right? So keep it simple, a simple filing system, whether it be in a 3-ring binder or maybe you have folders for different months of the year. Save all your receipts. You can always work it out later as far as what is going to be a write-off and what's not, all right? And set up the files so that you have it done. And so for those people that have been in the business now maybe a few months or maybe been even a couple of years and you haven't done anything, this is your chance in 2014 to start doing something so that you can start fully taking advantage of what this business has to offer, more than just the health and more than just the money, also the huge tax benefits as well. So save every receipt, everything that you do from food, even if you're hosting a party and you're buying your stuff at Costco or Sam's Club or whatever, that can be 100% write-off. The distributors who keep receipts take advantage of these tax breaks will definitely stay in the business much longer than the ones who don't, because they have that additional benefit. Not only are they going to stay in the business because they want to buy products at wholesale, not only are they going to stay in the business because they can make money, but now they're going to stay in the business and never leave because they also have the ability to save and get back from Uncle Sam another $3,000 to $6,000. I mean, who would say no to that? So with that, let me just kind of run through a couple of these, and then I'm going to have Debbie come on and talk more about some of the different deductions. So again, you might have to check with your tax accountant which ones apply or don't apply to you, like, for instance, travel and different trips. I'm going to just give you a little tip. As long as you're talking business along the way, or your intent of where you're going is to meet with someone when you get there, and it happens to be in Florida near Disney World, the IRS doesn't care whether you went to Disney World. The IRS cares, did you go down there on business? It doesn't mean that you did business all day long, but it means that you have to at least have done enough business in that day to write off that day's expenses, the hotel, the meals, etc. And so let's just say you do a sit-down meeting for an hour. That is legitimately enough business time to write it off. You can't just say, oh, how you doing? No, I know you're not interested in my business. Okay, let's go play golf. And you only talk for, like 2 minutes, and it was just some little jokey joke thing. It's got to be, obviously a legitimate business venture, if you will. Maybe your second home is something that you'll be able to take some deductions on. If you have more than one vehicle, it's going to be even easier because one can be considered as your business vehicle. Business meals can be done with your partner. If you have a spouse or a significant other and they're in business with you, now the meals you have together as you're discussing your business and strategizing can be a write-off. Gifts for customers and distributors, and of course samples that you give to potential customers and or distributors can be write-offs, including all the supplementation that you take, and then even hiring your kids or grandkids to do simple things, whether it's running errands or helping you clean up, and straighten up the office, or whatever it happens to be, doing some online stuff. Maybe you're not real good with the computer and they're going to do your social media stuff for you. You're going to have an opportunity to be able to write that off. So, guys, that just should give you a little bit of an idea. I'm going to have Debbie come on and talk more about some of the other deductions and some of the things that she's now documenting and really getting excited about as she's learning more and more about more benefits that this business can offer her. So with that, Debbie, go ahead and take it from here.
Hi, guys. This is Debbie, and I'm going to talk more from a person that's only been in the business for a year. I appreciate Marty sharing that Schedule C because I was quite confused between deductions and the Schedule C. And deductions that I'm really focused on, you can see there's multiple on the list. The mileage is a big one, and it's a simple thing to do. Just keeping track. They sell those either book at the store or even they sell mileage books that you can keep track of your mileage and what you're doing. And also the office supplies, of course, we do a lot of things online, but if you do happen to send gifts to people or whatnot, you want to make sure to keep track of those postage. And, of course, being in the business with my significant other, we do a lot of business meals. We talk Shackley very frequently. And, of course, we do meet with other people to see if they're interested in the company. So, of course, I found out that 50% of those meals are deductible, so you definitely want to keep those receipts. And also with any travel, John actually traveled to Montana and spoke in November, and he spoke to a couple of people about the business, so looking forward to that deduction. That was a few miles. Otherwise, the self-tax employment, things like that, I have a lot to learn. I am in the process of reading a book, and I think knowledge is the best thing we can learn for ourselves, with the taxes being the number one thing we should be thinking about, especially this time of year with the tax time coming up. The next slide is about other business deductions. And we have educational expenses and licenses. I think we all have to start our license to get our business going. Like Marty said earlier, if you have any legal or accounting fees. And the big thing, too, that I focused on during Christmas time was giving out gifts or samples to people, and that's what really can get your business going. We've given out a few samples at John's work, at my work, and it's led to sales. And again, they're tax deductible. The home and utility things, those things I'm still studying about and learning what I can and cannot write off. And of course, there's more deductions. There's so many. There's some lifestyle deductions that I want to talk about also. With the phone calls and expenses, as long as they're business, that's another thing we need to keep an eye on with use of cell phones, if it's for business or personal. Only the business end. So it is smart to get a separate line just for business, and you can deduct that. And Sorry. And then the long distances, which we know most of the long distance calls are charged anymore anyways. But with that being said, this is the biggest challenge I've had in my first year, is making sure to keep all those receipts. And this year I'm just going to focus on doing a lot better. With that being said, I'll turn it back over to Marty. Thanks, guys.
All right, sounds good. Great job, Debbie. Well, here's the deal, guys. If you look at all of the things that you can save, let's just give you some examples here as we go now from the slides to a document that is available on the TwinCitiesShackleyGroup.com website. And this is an older one from 1994, but I think it is very applicable. And this would be, let's just say, Mary. Her name's Mary, and she works out of the home to make extra money to help ends meet. But here's what the problem is. If she's only making about $15,000 a year, and maybe today that would actually be more like $25,000, but let's just use the numbers because I think the numbers still really speak volumes. First of all, here you got over $4,000 in state and federal taxes. You have, of course, Social Security that's deducted, and then if you look at the actual cost of mileage to drive to and from work, and then, of course, daycare, which I'm sure this is way out of date at $85 a week per kid, and then lunches, again, we know you can go get a $5 footlong, but for a lot of people, they're paying a lot more than $5. Then if you look at the buying of business clothes, if you're working in an office-type environment, dry cleaning, upkeep, et cetera, and then convenience foods, that you're, when you're eating on the run and to and fro because you're not always preparing a meal, so you're bringing stuff home, all that adds up. And you can see in this example that if this person worked 40 hours a week for 50 weeks with 2 weeks off, which would be nice. For some people, that's a real nice thing, but others are just wishing they could have 2 weeks off a year. The idea is that if you look at this, their actual amount, if you look at their 2,000 hours that they put in after all those expenses, when we look at what we call your net income, she only made a little over $1,000 to help the family's budget for the year. And a lot of people don't even think of it that way, but it's like, wow, that's really quite depressing. But now let's look at how much she could have earned if she was working from home. Again, if you take the same $15,000 that she was making part-time, which in Shackley would be literally, a senior director or someone on the way to coordinator, okay? If you look at your, vehicle expenses now, because you're out talking to people, et cetera, you're now able to write that off. In this case, it was 29. Now it's 56.5, so you can see a big difference. The business lunches, now you're able to write off half of that. Because remember, you still would maybe pay for the bill when you take someone out to lunch, but you only can deduct the amount of money it was for their lunch. So basically, instead of trying to figure out who spent how much and drank how much at lunch, it's just 50%. They just cut it down the middle on what you can deduct. Business clothing, let me give you a little tip on this. As long as it has a logo on it, and you can write it off. It's kind of funny because I met this bishop of a church, and on his beautiful handmade suit, it had the logo and the letters for their church, and I guarantee he did that because he found out he can then write it off, in addition to being, a church organization. But that's something that you can do. So, think of the different blouses, the different shirts, golf shirts, long sleeve shirts, dress shirts, etc., that you can have monogrammed with, or not monogrammed, but silk screened or embroidered with the Shackley logo, so you can write that off, including, like, for instance, dry cleaning. That's another one that people don't understand. But when you go on a trip and you come back and have your clothes dry cleaned because you were on a trip, you can write that dry cleaning off, which is pretty cool. Convenience foods, you don't need to because now you can cook healthy foods at home. No daycare. Now the mom or dad can actually raise their own children, which is cool. So when you look at that, the additional money kept in the household now is a whole lot more than $1,100. Now we're talking $11,000. So when you look at the differential of what you can deduct, whether it's home office deduction, the medical, the allowance for the kids, maybe in your first year you didn't make all the money because you didn't actually lose it, but you took it as a loss because of all the write-offs that you had. And then, of course, all the deductibles that you are able to have. When you look at that difference as far as what you actually paid because of your tax reduction, you're talking about a difference here of over $11,000. So would you rather net $12,629 or $1,156? I mean, I think the choice is pretty easy to figure out. So if you think about that, and that's a really simple version. I mean, this is like not even getting close to all the write-ups that could be taken. Guys, understand it's your life. You own it. I wanted a company, this is what Dr. Shackley says, that would improve the lives of everyone it touched. And there's no question that Dr. Shackley has done that, not only from a health perspective, but also from a wealth perspective. And I love what Roger Barnett says, that the number one product that we have to offer is the business opportunity of changing lives. Not only are we looking to help eradicate malnutrition and inspire people in underprivileged nations where we can become the first company to win the Nobel Peace Prize, but the idea is that we can, think of these global wonderful initiatives, but we need to do what we need to do in not only thinking globally, but also acting and doing the things locally, meaning in your own home, what you can do to be a part of this incredible economic opportunity of what we have. So with that, I'm going to go ahead and just transition and show you some of these handouts that you can look forward to getting access to. And so the first one I want to show you, let's see, I want to use this one. Yeah, this is the sample income tax worksheet that Judy Murley was so kind enough to put together and make available. We just kind of tweaked it and updated it and made it a little less personal, so it didn't have her personal type information on there. But as you can see, this should be a great guide that you can use to remind you of what are the different categories. So whether you do it on your own with, say, TurboTax, or you go to H&R Block, or you have a tax accountant, or you do it on your own, these are the kind of things that you're going to have to tally up. So, for instance, when you talk about the sales tax that you paid as a business owner, you're going to have to keep track of that from all your receipts. A little bit tedious, but it's going to be worth it. And I'm going to show you another one that will really explain that in a moment. Entertainment, credit card interest, and you can see all these seminars. Like, for instance, coming up in different regions throughout the nation, we're going to be doing the Shackley University Live. Well, those particular seminars, whether it's $49.95 or $69.95, depending if you get it earlier out the door, is 100% write-off, including the mileage that you drive to that business event and including the overnight stay. And because you're on the road, listen close, 100% of your meal is written off because you're now away from home overnight. When you qualify, by the way, for Star Achiever and other type things, those are going to be an opportunity for you because a lot of times if you go on a trip, what you understand is that even though the trip is free, meaning you didn't have any out-of-pocket expense, they still 1099 you, which means that they show that as income. But then you can go ahead and turn right around and write that trip off because you were there. Why? Because it was a business trip, okay, even though it's an incentive trip. If you're a member of Better Business Bureau as your local distributorship. Debbie talked a little bit about having a home phone and a cell phone. Well, if you have a home phone, then you can write off and legitimately write off 100% of your cell phone. Even if you do use it for some personal stuff, you can say, well, I have my home phone for home stuff. I have my cell phone for business. And therefore, that can then be a business write-off. If you have more than one home phone, like, for instance, you have a home phone, then a second line for business, then 100% of that second line can be a write-off because that's now your business line. The mortgage and tax, real estate tax and mortgage interest is part of the home office deduction. Of course, all the electricity, garbage, natural gas, all this stuff is a percentage of that based on how much of your home you use for your business can then be written off. And again, I won't go through the details so we don't have time, but I want you to kind of see the examples here of everything from car washes, where you can do actual expenses versus, your mileage. But I always tell people, keep all your receipts for everything because you may find out that if your car, listen close, is newer and extremely economical on fuel, you might be better off taking the actual deduction instead of the mileage deduction because you're actually going to be able to save, well, I'm sorry, I did that the other way around. If your car gets really good mileage, you're going to want to take the mileage deduction. But if your car doesn't get very good mileage and you've had to spend a lot of money on different things, you might find out that you would be better off taking your actual expenses of what your fuel cost, your oil changes, and all the other things. So again, we'll leave that alone. That could be a half-hour training in and of itself. The training aids, anything you buy as far as brochures, printing that you do, postage, your new computer you bought, your new printer that you had to buy because the other one kind of gave out. It might be everything from individual products that you not only use, because remember 100 PV is required for you to get a check, so therefore you need to be able to write it off, all right? And then of course there's other things that you would use that everything from your auto ship deductions, the shipping amounts that you would pay. Obviously shipping's free now with some of the different products, which are great on Shackley 180. And then of course your other contributions that might show up in other things like your itemized deductions, or your Schedule A would be things like contributions to missions work or your church or different charities or your synagogue or what have you. All those things would be added in different areas. So you need to keep track of all of this, and then you'll figure out as you're doing your taxes where they're going to go on what schedule. But these gives you an idea of all the different ways that you've made money. This is your recap of your 1099, and then all the other things are the actual expenses. Okay? One more quick one I'll show you, and then I'm going to bring Cheryl on to share the business presentation before we wrap up tonight. And that is, let's see here. Which one do I want to show? Yeah, let's show this one. Now, this one is how to save or basically in turn make $240 per hour, and that is by just taking the time, about 5 to 10 minutes per day, every day, could put an additional or get money back in the way of a bigger return, anywhere from $3,000 to $6,000. Here they're just using $5,000 as an average. Now here it does talk in terms of network marketing. It talks in terms of retailing products. It talks in terms of your different expenses. But I want to slide down here and show you guys exactly what he's getting into. And this is kind of a day in the life here of the prospect who goes and meets with someone, has mileage, has a breakfast, has lunch, has drinks, attends an opportunity meeting, et cetera, et cetera, et cetera. Well, if you break it all down here now, this is where it gets really cool, is that, first of all, the lunch with coworkers, when you're talking business, you can write off. Again, 50%, we talked about that. Travel expenses, when you're going somewhere on vacation, you can still go do business and have fun along the way, so you can write it off. Home office deduction. Here's mileage, talking about the miles that you drive. And so the way that you drive and where you stop and what you do will determine whether it's a business or commuting miles. So that's something you want to learn and document well. How about paying your kids? Rather than giving them an allowance, how about actually put them on a salary where they do work, and the work that they do, you give them some as they for spending money, and the other goes into an interest-bearing money market or savings account for their college or their wedding fund, okay? So then all of a sudden now your child working for you, the money you would give them anyways, instead of just giving them money, you can now write off the money you're giving them by documenting that they're doing business with you and for you. Health insurance, now that you're self-employed, has got a greater deduction. And so when you add that all up, in this particular case, it showed that the refund now was, instead of maybe a couple thousand, was $5,600. So literally $3,000 to $4,000 more. So that should give you, again, an idea, and this is, again, just all stuff. It's about the documentation. The devil is definitely in the details. But if you're willing to take that 5 to 10 minutes a day, document things, get a folder together, figure out at the end of the year, or now as we're coming up for tax time, start separating out those years, separating out the different expenses per month into these different categories that we showed you earlier, you can give that document then, not all the receipts, because they don't want all your receipts in a shoebox. They just want the actual category totals for the year, and then they'll put it into the actual forms if you're not going to do it yourself to be able to figure out what kind of tax deductions you're going to be able to get. And so now all of a sudden, the last thing I want to mention is that there's a possibility that the deductions that they take at work, for how many kids you have or what kind of expenses that, or I don't even know what it's called because I haven't worked for so long. Maybe Debbie can come on. But the fact is that maybe you can change those numbers a little bit, because then that way you're not paying in so much and you're able to keep more every month. And then when it comes to tax time, since you're going to have the write-offs, it'll all work out. The goal should be, just so you know, the goal should be to pay actually in a little rather than worrying about how much you're going to get back. And the reason I say that is because if you think about it, that way you have control of your money all year rather than giving it to Uncle Sam and then hoping to get X amount back. So as you learn about how to do your, Debbie, are you there? Your how many dependents you have, or I don't know. No, anyways. I feel so sad that I don't even know that, but that's because I don't work.
Dependent.
Yeah, but there's something like you put in so many. Like even if you don't have 6 kids, you can still put 6 something, and then that means that they'll take less out. But then, anyways, I don't even know where I'm going with that, other than the fact that that's what people do so that they can get a bigger check throughout the week and throughout the month, throughout the year. And then because of all the write-offs from their networking business, they still get a bigger return doing that than what they did before. All right, we'll do some questions and answers here in a little bit and maybe help give some clarification on that. Okay. Oh, yeah, I just realized I do have more time. I was looking at the clock going, wow, we got plenty of time. All right, so that's what we're going to do. We're going to open up for questions and answers. Now that I'm basically done and confuse myself is something that I've not had to do for a long, long time. All right, first of all, let me take some questions here. And I see that Katrina is just going just crazy here with questions. So let me just quickly answer some of hers, and then we're going to unmute the lines, and then you guys can ask some questions before we bring Cheryl on. All right, so the first one is if you have family with you and you're visiting with others and you want to know, and they want to know more, how can I explain it in an easy way? Well, that's not really necessarily a tax question, but it is a good question, so I'll answer it, and here you go. So if you're going somewhere and you're visiting others and you're taking a trip and you're going to go there with the intent that you're going to pop in a DVD, or you're going to go online, or you're going to use your new, Shackley 180 conversation app, when you get there, or on your way there, you're listening to maybe a Front Runner CD, or maybe you're looking Hotline News or something like that. What a great way to be able to share the business with them by nonchalantly listening to a CD in the car on the drive over, and when you get there, popping in the DVD and watching that, whether it's for Shackley 180 or whatever it happens to be. Or maybe you're just going to get together at a coffee shop and turn your laptop around and show them some things online and say, hey, what do you think about that website? I mean, those are all kind of simple and easy ways to kind of show and let the technology, whether it's a video or the DVD, do the work for you. All right? So hope that helps. Next one, how can you figure it all out with all your stuff you have for your Shackley company? Okay, I don't know what you're getting at there. It is a lot of stuff to figure out, but the fact of the matter is that these handouts that we're going to give you and make available to you will give you the different categories, and then you just have to ask yourself, do I have those categories? And the answer should be yes, yes, and yes in most cases. It'll just be a great memory jogger on what you do have as far as write-offs. What if I only have one phone line? Well, that's a problem, because a lot of people today, not a problem, it's just whatever. A lot of people today don't even have a home phone. They use their cell phone as their only phone, okay? Therefore, you would have to be able to figure out, because you're in a business, that a portion of that phone bill, and you'd have to figure out how much. And again, it's all about documentation, so the IRS isn't going to audit your phone lines and how many of them are to friends and how many of them are to business associates. But maybe 60% of your phone use is for business, and therefore you can take 60% of that bill. In the event that you only have one line, it's a little bit tougher, but you can still definitely write that off. can you send this all to me by, and I don't know what, probably by email? And the answer is no, I won't send it to you, but you can definitely access it later on this evening or tomorrow when I upload it to the Twin Cities Shackley Group website. Of course, you need to be an active paid member to access the website, so you can work that out maybe with your sponsor upline. All right. Now let's open up the lines and take any other questions from phone and anything about taxes or your business and things like that. Debbie should be back on. Maybe she can help as well. All right, here we go, guys. Hold on one second.
Debbie, you are now unmuted. For you. Tell them, Debbie, what they write off.
Okay. Cheryl, go ahead. I'm sorry.
Debbie had the word you were looking for, that they write off.
Okay.
Are you with us, Debbie?
I'm here. It's exemptions.
Exemptions. Yeah, okay. You take so many exemptions. So, guys, if you're on a speakerphone right now and you know who you are, go ahead and press *6 on your phone or manually mute your phone because we're getting some reverberation. Thanks. Okay. So the idea is that you have exemptions. So, like, let's say normally, Debbie, you would have so many kids living with you, and so if you had 3 kids living with you, you'd take yourself, your spouse, and your 3 kids, so you'd have 5 exemptions. Therefore, you'd get a little bit bigger check than if you only had 2 exemptions. Is that right?
Yep, that's right.
Okay, so here's what you can do, guys. You could actually then put down, in that case, you could put down 11 exemptions, even though you only have 5, people in the home. You'd be like, well, how can you do that? Well, you can do whatever you want. The deal is that then you're going to be able to get a bigger check throughout the week and throughout the month. And then when it comes to tax time, it'll all be made good because of all your write-offs. You'll still be able to get a return. Now, some people are freaked out to have to pay in. Let me just say this. If you can figure it out where you only have to pay in, $400, $500, $600 at the end of the year, what you've done is you've been able to keep thousands in your hands moving through your bank account rather than sitting dead at the IRS hoping to get some back. So just remember that the wealthy people hang on to their money and then pay as little in as possible. Other people say, I don't know what I'm doing. IRS take all my, or Uncle Sam take all my money, and then they beg and plead to hope to get some money back at the end of the year. The problem is all the begging and hoping and pleading isn't going to help if you don't have write-offs. And by having a business like Shackley allows you to have those write-offs legitimately that can get you bigger returns. In and of itself will justify the $299 that you maybe started as a goal, which is a write-off. And again, I think more people are still not *6ing their phone that are on speakerphones because we're getting major reverberation. Okay, so yeah, there you go. So whether it's the $299 or your 100 PV on auto ship or the different things, those are all legitimate write-offs that you can now start taking. So before you couldn't write off your food, you couldn't write off your meals, you couldn't write off your supplementation, but now you can because it's part of the requirements that you need to get paid from Shackley. All right.